Angel investing is a great way to potentially make a lot of money, but how in the heck do you actually do it? Well, a couple of months ago, I went over that with Romy Dillon, and I'm so excited that he is back again so that we can dive deeper into angel investing and the role of the investor and the things that he or she may need to look at and how do you even get started. Romy, thank you so much for coming back.
It's great to be back, John.
All right, let's talk about this. So when it comes to deals and angel investing, what kind of strategy do you think someone should have when it comes to angel investing and investing in these startup founding companies?
Sure. First, you'd like to think about what fits. Is there a sector you're interested in? Perhaps you really enjoy software. You might want to be a part of cryptocurrency or health IT. So pick one. And second, think about how much risk you would like to take. Do you like to see a product? Do you want to be the one who funds the product? Or are you looking for revenue? Those two things, in addition to, are you looking for a local entrepreneur or are you fine with national and out of state? That's a good way to get started, to think about your appetite.
Well, that sounds very interesting. How exactly does someone who's interested in a particular sector or a particular market, how does someone look for deals? How does that even begin?
Right. It seems like they're hard to find. Once you start looking, the challenge will be picking one. So you can reach out to local startup attorneys, technology attorneys in your community. There are some angel groups who will be more than happy to share their deal flow with you, especially if you're a subject matter expert. And third, you can always go on the internet. There's AngelList, LinkedIn. There's a good number of websites out there that you can just type in and start searching for deals that really fit your appetite and your interest.
Yeah, so we talked about in the first video that It requires an accredited investor to get into this type of angel investing.
That's
it is pretty much the sky's the limit, however much you want to invest, but it comes with there's really no protection if you invest in a company unless you really know what you're doing. And even when it comes to strategies, you really need to think about diversifying your investment portfolio.
Ideally, you'd like to diversify into as many deals as you can. You never know which one will grow, which one will create progress. It's hard to know what the market's looking for on any given day. The thing, though, is that if you are just warming yourself up, you may want to create some deals that already have traction. So you can start to build some fluency into how do you think about investing in, an angel fundable company. So you can maybe some more revenue. Maybe think about customers. Maybe you speak to a few customers of a company. That could be one way to really kick this whole thing off. Then once you develop your fluency there, then you'll have an idea. I can go a little earlier and fund a product or a pre-product.
Okay, so for a lot of people who are not used to doing this kind of stuff,
Sure.
this is pretty far into the weeds when it comes to investing and deal flow and things like that. So just to explain to the viewers who may not have a good understanding of what's going on, you can invest in companies that have not had any sort of revenue, that have just an idea, and you can get into that, but that's a lot of risk. And for the potential investor who may not have a lot of experience, that might not be a good fit to get into. But if you are just starting out, looking at a company that has already generated revenue and has, like you said, a little bit of traction, that may be a little bit easier for the new investor, angel investor, to understand what's going on. And I know there's a big learning curve when it comes to vocabulary. There are a lot of industry terms.
Absolutely.
the vocabulary, the shorthand is quite extensive when it comes to angel investing. So different ways to get into it. I guess, like you said, it varies by individual depending on what the person is interested in getting into.
I think that's a great point, John. The other thing to keep in mind is no matter how early you get, angel investing, even with a little bit of traction, it's still early. And when you invest that early in the process, it's the highest risk. So just be prepared that there are going to be some peaks and valleys. There are going to be some great times and some really, really slow times. You just have to see it through, and some companies break out, and that's why you participate in this.
Kind of like what we mentioned in the first video, it's really a long-term play. It is not something where you invest it. It's not like day trading, like I said before in the first video. It's not day trading. You really have to have a lot of patience if you want to watch a company grow, early startup grow.
Right.
So how do you figure out which company is investable? Which one is even worthwhile investing?
We have some rules of thumb, at the Arizona Founders Fund. First, we think about a team. We like to have a subject matter expert as the founding CEO. They have the insight on the market or the technical product that they're trying to sell and what the market could need. The second is the market. I like to see a growing market that's growing at double digits, ideally. Third, ideally a product. Can there be a prototype? Can we test it? Can we play with it? Can we ask questions about it? And then there's your deal terms. Does the deal make sense? Is the deal commensurate with how early the product is? Sometimes entrepreneurs are looking for a huge valuation and all they have is an idea.
Well, I think those days are pretty much over. An idea that is being rewarded with high valuation and investors willing to dump a lot of money. I think that train left several years ago. Now the investors are a lot more careful,
That's
shall we
right.
say. The money is a lot harder, a lot tighter when it comes to founders and startups. So I want to take this opportunity to let the audience know that if you have any questions during the live broadcast, please feel free to leave them in the comments and we will try to address them. And if you are watching this on a replay, please feel free to leave them in the comments and Romy and I will try to answer those questions for you. All right, so when you are looking at these deals and you're looking at these companies, what qualities do you look for? Besides having a minimally viable product and having some sales and not crazy valuation, what other qualities do you look for?
I think that's a great question. Ideally, John, we really enjoy supporting and investing in entrepreneurs and CEOs who are subject matter experts. And let me just touch on that for a second.
Yeah, exactly. What do you mean?
A subject matter expert is someone who has worked in a particular industry who is now solving a problem in that industry. So what you would like to see, and what we like to see, is someone with 5 to 7 years experience who has witnessed this problem for themselves and said, once and for all, I'm the one who's going to solve this issue for customers, and I'm going to build a product to sell. When you have that insight, they can then build a product. And that product is something that customers will, hopefully it'll resonate with them because they'll say, someone who is an insider built this just for me. Is what my pants have been on fire waiting for this solution. So we really like those types of founders and CEOs to back. And then we think about, are there customer references? Can we speak to a customer? And a great CEO will say, here's my long list of customers for you to speak to. And then we pick up the phone, we call, and we ask those customers, how long have you been using the product? And why do you love it? And finally, would you recommend this product to a friend? And those are really helpful to us to know if we want to move forward or not.
Sounds great. So, what are some of the reasons? Arizona Founders Fund has invested in a few companies. Some have done really, really well, and there are one or two that are just kind of lagging and kind of dragging. And also, you've seen other companies that have tried to start and they never went anywhere. So, what are some of the reasons that startup companies don't make it?
Some startup companies have a challenging time making it for a few reasons. The first is they're just not able to raise more capital. They might not raise more capital for a few reasons. The CEO and the founding team, they just might be tired because they've been moonlighting for years, even before we got involved. And that takes a toll on a team.
Yeah, bootstrapping is hard.
Bootstrapping is a hard thing to do. The other reasons, the market might not want the product. So all the analysis that went into it, fast-growing market, the CEO's insight, the team having energy may not matter. There might not be as much of an appetite. And those two reasons tend to lead into all the other 2, 3, 4, 5 reasons why startups might not make it.
Well, I think one of the main reasons is not funding. And funding is one of them,
Right.
but failure to make money, failure to generate revenue. And that I think that's a big problem for startups. If you are constantly looking for funding for a 1-year runway, then the CEO and the founders are constantly fundraising. They
Right.
don't have time to actually build a product or invest in marketing and sales, which is really what investors are looking for. They want to see the recurring revenues and the monthly growth. They want to see that nice hockey stick curve going up, maybe doubling MRRs. So if they are unable to generate revenue, I think that's also a big problem.
That's right. When you're not generating revenue, you're fundraising. And when you're fundraising, you're not leading your team. CEOs aren't setting an example. They are not building the culture that the bootstrapping that got them to this point, they're not able to show that to their team and continue to show that. And that is a practice that really matters to an early stage team. When you have 15 to 20 people working together on a mission, the CEO's role is absolutely valuable. And when a CEO is fundraising day in and day out, even after they raise money, it's really hard to galvanize and create energy in a team just to move forward and to try to change the world with their product.
And what you repeatedly said was really, really important. You said that if there is a market for it, so many times we hear pitches and see ideas. It sounds great. It sounds great on paper, but is there really a need for it? And really, the ultimate arbiter or is of whether or not a company is going to be successful is what the real market appetite is for that product or service. And so no matter how great, how convict, we saw a company actually, we looked at one that was a health a company that is trying to deal with billing for medical billing. I personally don't think that there's a good market for it, and we'll see what happens. I think it's a good idea. There is a problem, but I'm not sure if the market is going to adopt that idea.
That deal was extremely interesting, and we still keep on tracking it, but it's really a case of gigantic market opportunity, but the market needs the right product. And it is very possible that entrepreneurs have their heart in the right place and want to make the lives of a customer easier to pay their bills, for example. But it's also possible to just get in the way of that process from happening by building the completely wrong product for it. And we do have those types of entrepreneurs. We're hoping that if we just wait on investing, they'll make that insight, come back, tell us how they're doing it better, and then we can support them in their new vision.
And that goes to show the importance of having the experience of having seen a lot of deals fall through, that you pass on or that you jump on. Having that experience allows you to say, okay, this is the strategy to go with. And for a lot of people who are just starting out getting into angel investing, they may not have that experience. And for me, I don't have the time, I don't have the experience to figure all that out. And that's why I participated in Arizona Founders Fund,
Right.
because I'm going to leverage your expertise so that whatever money that I put into the fund will quadruple, 10x, 20x, or whatever it may be. And for busy people who are interested in investing, I think investing in a fund may be a good start. Just a small amount, put it in fund, and then get exposure to the deals and how investments are being evaluated.
It's great to have you on board, and it's wonderful to have your support, John. And I think that you clearly have your day job, and our day job is managing that investment and investing it into Arizona's great technology companies. We have the time and the resources to research competition, to interview customers, to host customer reference calls. We put in 25 to 30 hours of research per deal, per investment. That takes time, and that's why some of our investors do participate with us. They want to write checks. They are interested in technology and angel investing, but not everyone has 30 to 40 hours a week to dedicate to it.
Yeah. So initially, Arizona Founders Fund concentrated, we are still focused on Arizona-based companies.
Right.
But we have diversified. Instead of just concentrating on SaaS and data, we saw our first med tech deal at the last meeting.
That's right.
Okay, so what made you decide to expand that?
That was extremely exciting for us. As you know, we have spent over 2 years evaluating great Arizona software companies. That was an exciting moment, and it still is to be evaluating them. Well, we're also in Arizona, and we thought, wow, there are some great life science, health IT deals here too. And we have an incredible hospital system. They are commercializing new technologies all the time. We should really think about opening our investment purview to include them. And that's why we started looking to say, if we're truly an Arizona technology investor, we need to be open to all technologies here. And it only made sense with the mission that we have.
So sounds great. I'm really excited to see what deals come through the pipeline in the upcoming months. You have a company, or a founder has an idea, and we evaluate it at the Arizona Founders Fund. And now you want to say, okay, good idea, but we are just not ready to invest. How do you tell that? How do you communicate with the investor the bad news, if you will?
It's a great question, John. And truthfully, we do have some champions of ours love to invest in the fund because it's hard for them to give bad news. And let me explain. When we meet entrepreneurs, it's very easy to walk away from those conversations energized. We feel better about the world. We know there's a solution out there that is about to come to market that we might use, or somebody we know might use that product. But what ends up happening from an investability standpoint, it's just not ready. So an angel investor can learn from us. And one of the things that we do is we have 3 decisions that we make. One is, yes, we'd like to move forward and learn more. The second is, no, it's not a fit. And the third is actually our most common decision. We're going to wait. And here's why we're going to wait. We wait because it's early. We wait because maybe the close to their financing is in 7 months. So it might not make sense to invest today when we might not have to close, this is January, until June. So we'll wait a little bit. There are times when we'd like to wait because they're working on 2 large contracts. And we want to see if those contracts close. And maybe we can see how that beta test goes. There's all sorts of reasons to wait. And we encourage angel investors to not think that they have to say no, because maybe what they're really trying to say is, I'd like to hold on for a minute and let me just follow you and track you. And please add me to your update list. Send me updates every month, and then I'll know whether this is a fit for me at that time.
Yeah, that's good insight. Speaking of updates, this is not for the investor, but more for the entrepreneur. It is. I can't tell you how important it is to keep your investors and potential investors updated, especially just progress reports, little emails to let your potential investors or investors know that this is what the company is doing. Going dark and not keeping your potential investors or investors in the loop is probably the worst thing you can do, in my opinion.
I think so too. I've also been many of the deals that we have worked on and we have ended up moving forward with is because we followed their progress. Best way to follow progress and to keep interest going from an entrepreneur's perspective, keep sending out updates. Even though they're always working, if they don't send an update, it occasionally sends a message that nothing is happening. They may have gotten another job. They may have moved away from the opportunity. They're not interested in it anymore. Entrepreneurs find that assessment to be, it gets them prickly because they said, of course I'm working hard. What else do you think I'm doing? But an entrepreneur can control communication, and we encourage them. If they're not writing updates, start writing them in bullet point form, any form, but just get it done and keep telling us about any progress that's happening.
And it also keeps the potential deal top of mind for these potential investors.
Right.
And it makes the next round of fundraising easier because you are keeping everyone in the loop instead of having to pitch from 1 year ago until today. They already know, the potential investors already know what's going on. So you don't have to do a big update. And the credibility is already there, and you're dribbling that credibility along the way.
I think that's a great point, John. What it also does is it shows the quality of the entrepreneur. An entrepreneur who's been told no, but still keeps the line of communications open.
That says something.
For the future.
Yeah.
That says something. That shows an entrepreneur who has really thick skin, has grit, has perseverance, and is someone who always has the long-term interest of the company in their mind. And someone who does that can probably raise some good money and grow the company over time because they're going to be told no more often than yes.
All right. I'm going to answer this question. James asked the question, is the fund still open? And the minimum investment amount. I think you can probably send him the information directly. And the fund, from what I understand, is still open. Is that correct?
The fund is still open. The minimum investment amount I can share offline, but just to keep in line with SEC regulations, I can't share too much of that here in a public setting.
Right.
But it is open.
Because we need to make sure it's an accredited investor.
That's right.
Who can tolerate the risk of potentially losing that investment.
That's exactly right. That's right, John. But James, we'll follow up with you.
All right. So speaking of money, there is, for a particular entrepreneur to accept money, there is just money investment from an investor or a fund, and then there is smart money. Now, if I were an entrepreneur, I want smart money, but can you explain for the potential investor the difference between money and smart money?
Absolutely. And there are some deals out there that investors know whether they're money or they're smart money. And there's a couple ways to sort this out. First of all, the difference is, are you just helping an entrepreneur fund their company? Or are you helping them fund and mentoring them and opening your network to them? So smart money is money that has experience, money that has wisdom, and can bring relationships and partnerships to the company. And those are things entrepreneurs will share directly with an investor. what they're looking for. And some of them know they just need to raise capital so they can pay the next payroll. And other ones, they'll say, we'd love to work with you because we think that we'll be a better CEO because you're a great CEO. You've created a win before, and we think that that will really help us build a better company, a more sustainable enterprise.
What I have seen in our meetings is that the folks who sit in the meetings, they are experienced, sometimes serial entrepreneurs who have gone through these founders that are pitching to us. So a lot of times we will in our meetings, we will say, hey, I'm going to connect you with X, Y, and Z so that we can help you solve that potential problem. And the investors that bring that knowledge and also invest, that's in my opinion, that's smart money. And I invested early on in a company, and actually the CEO did not want to take on an investor that is not bringing value in addition to the monetary investment. So that was an interesting play on the CEO, which I really respected.
Those types of CEOs are far and few between, especially when the entire investor base is there for a reason, and they all know the reason that they serve. That's a really special decision. Not made too often, but when it's made, especially in the right company, in the right context, great things are bound to happen.
Well, sounds great. Well, I'm going to try to wrap this up, and I want to remind the audience that if you have any questions or concerns, leave them in the comments. If you're watching on the replays, please do so. Leave comments, and Romy and I will try to answer them for you. I want to thank Romy for coming back here again, and if you want to come back again, and if the audience has a lot of questions, I think it will be a great thing to bring you back, and we'll try to answer those questions for the potential investors. And those who are interested in Arizona Founders Fund, I have put in the link in the video description. I also put in the video description the first interview that we did covering the basics of angel investing. Thank you again, Romy, for coming.
It's great to be here, John. Looking forward to coming back.
All right. Take care. Have a good night, guys.
Bye-bye.